Life brings uncertainty, and with that comes the risk of loss from unexpected events. This burden to human activity has been alleviated by the introduction of insurance, which has existed for millennia and been practiced in various forms over time. Takaful is commonly referred to as Islamic insurance, and here at the International Takaful Summit, over 300 delegates from around the world have gathered to discuss the growth, the challenges and the future of this industry. I'll be interviewing some of the attendees to learn more about Takaful, but right now I'm going to catch up with event co-founder Mohammed Abdullah to get an insight into this industry. Why have you organised this event?
Well, I think that the Takaful industry needed to have an event organised where the industry can all gather together and discuss the pertinent issues that were facing the industry at that time.
What's the significance of Takaful?
Takaful is the Islamic alternative to insurance. It's a form of protection. Takaful in itself is sort of like a social structure to keep everybody protected for any eventuality that happens.
Skeptics argue that Takaful is similar to regular insurance. You know, it's a game of risk, it's a game of chance. Does this contravene Sharia compliance?
Well, I think that's a question for the Sharia scholars, and I think most companies have their own Sharia board. I'm not an expert in jurisprudence when it comes to Islamic structures and things like that, but they are, and they say that it's permissible.
Like all Islamic financial products, Takaful follows the principles of Islam and must observe Sharia law, which prohibits investment in activities or products deemed haram or forbidden, such as alcohol, arms, gambling and pornography. Takaful observes Islamic law, so has to operate in a different way to conventional insurance, with specific functionality and with a different relationship between policyholders and Takaful operators. Could you tell us some of the unique features, the most key features of Takaful?
The word Takaful itself is talking about joint guarantee. So it's a risk sharing as compared to risk transfer. And that got a lot of ramification for the industry in terms of tax, in terms of accounting, in terms of distribution of profit, etc. So you have two pools. One will be the pool of the shareholders and one is the pool of the participants in the pool. So the Takaful operator is the link between those two, the conduit between those two.
Could you describe some of the functionality of Takaful?
Okay, the functionality is basically we are making a donation, we are not paying a premium. Islamically, when you make a donation, it's unilateral. That eliminates riba, gharar and maisir. So the people give a donation in the pool and that is managed by the Takaful operator, and there are mechanisms to pay him for that. And that is where you generate the profit for the company as a whole.
Takaful is clearly different from conventional insurance, given that it has to observe Islamic law and so functions in a different way. Here's a comparison. Unlike conventional insurance, Takaful is not only subject to Sharia law but also the governing law of the land. Riba or interest, uncertainty and gambling are prohibited in Islam, so apply to all financial products and services, but obviously this doesn't apply in conventional finance. Conventional insurance is based solely on commercial factors, but Takaful is based on mutual cooperation. Premiums paid into conventional insurance are owned by the insurance companies in exchange for bearing all expected risks. Participant contributions to Takaful are donations, which help by providing protection against potential risks. A surplus Takaful fund is shared among participants only, and the investment profits are distributed among participants and shareholders. All surplus and profits in non-Islamic insurance belong to the shareholders. In the event of a deficit within conventional insurance, the insurance company covers the risk. However, a similar scenario in Takaful would see the Takaful operator provide the participants an interest-free loan. Reinsurance in conventional insurance does not require Sharia compliance. However, reinsurance or re-Takaful requires Takaful companies to adhere to Sharia principles. Although a Takaful operator can bear a strong proportion of risk of covering its participants, it can't realistically bear the whole risk, so has to turn to reinsurance or re-Takaful. What is re-Takaful and what purpose does it serve?
Re-Takaful is the offloading on some risk by a Takaful company to another company. By doing so, the Takaful company frees some capital and is able to subscribe, underwrite more business.
Takaful operators, re-Takaful, they do so with conventional insurers. That is the criticism, that they're going outside the permissions or permits of Sharia compliance.
Conventional finance, the conventional insurance have been around for 3, 4, 5 centuries, and our industry has been around for 3, 4 decades. So certainly there is a way to improve, and certainly there are some Takaful companies that are re-Takafulizing with conventional. But this is the name of the game nowadays. Again, you live in the environment where you're living, you know, and certainly things are moving forward and are improving, but it takes time.
The consequences of the recent financial crisis impacted globally and devastated the landscape of the conventional finance sector. However, how did Islamic finance bear up during this time?
It didn't suffer as badly as conventional finance, largely to my mind for 2 reasons. One was there wasn't a critical mass of Islamic finance, so it was an issue of scale. But I think more importantly, the nature of Islamic finance in both risk sharing and in using instruments which have real economic value, there was less preponderance for them to be exposed to what I would call the financial market. So the real economy didn't go down so much. It was the financial economy, derivatives trading, speculative trading, which was really impacted quite badly.
The products that was put at the market that created it were infested with riba, gharar and maisir. So the Islamic institution did not buy those products. But that does not mean there are no other risks. There is market risk, there is foreign exchange risk, there is operational risk. You haven't trained your people properly. There is Sharia risk. We have the famous Blom case in the court here. There is legal risk. So these risks are still there.
Islamic finance is a growing niche within the broader financial services industry and offers itself as a viable alternative. However, where it does not differ is that, like all finance, it's subject to compliance and regulation. In terms of compliance, what kind of scrutiny does Islamic finance undergo?
Well, the scrutiny for compliance, I think, falls under 2, if not perhaps 3 levels. First, obviously, is Sharia compliance. So there are Sharia boards either structured at the individual company level or at national level, and that varies from country to country. Second, there is also a regulatory environment which is set up by either by Act of Parliament or constitutionally, where Takaful and Islamic finance is actually administered with reasonable levels of what I would call regulatory compliance. In addition to this, you do have standard setters around the world. From an accounting standpoint, AOFI or IFRS have standards for Islamic finance accounting, Takaful accounting, and the likes of the Islamic Financial Services Board also sets compliance standards.
In a post-financial crisis environment, scrutiny and reforms have been high on the agenda, and compliance is of the utmost importance. Like conventional finance, all products and services within Islamic finance have to observe governing law of the land and Sharia law. Obviously, there'll be certain issues around launching Takaful around different regions in the world because of different legal structures, depending on where you are. So is this a challenge for the future growth of Takaful?
It is a challenge. However, ultimately, each jurisdiction has its own regulator, and that regulator will issue its own regulations. And therefore, those differ, as you can imagine. Models differ also, and therefore trying to harmonise all of that is a real challenge for the market.
And what do you think the way forward on that is?
Well, it's difficult because I don't think we're going to get one solid answer. Most regulators actually are secular, and therefore they will not want to delve too deeply into the issue of Sharia compliance, but the stage of regulation that each jurisdiction has is very different at the moment.
Have there been any issues in balancing British law and Sharia law in getting Takaful off the ground here in the UK?
No, there haven't been. We have a system of law whereby if a Takaful policy is governed by English law, then English law will be the law that governs the policy. Obviously, a court will take into account Sharia principles, but ultimately it will be English law that will govern the policy.
At the 2013 World Islamic Economic Forum, Prime Minister David Cameron declared the UK as the leading Western hub for Islamic finance.
I don't just want London to be a great capital of Islamic finance in the Western world. I want London to stand alongside Dubai and Kuala Lumpur as one of the great capitals of Islamic finance anywhere in the world.
More than a dozen banks deliver Islamic finance transactions in the UK. The government issued £200 million worth of sukuk in 2014, and indeed Islamic finance-related investment is evident across the London skyline, with developments such as the Shard, Harrods, Chelsea Barracks and the Olympic Village.
Islamic finance is more than just sukuk and having Islamic banks. You have to have equity market. There must be some mutual fund or unit trusts which are Islamic based. So there has to be a variety of investment instruments which are Islamic or Sharia compliant. So this is a good start, but I see it's still a long way, for a Takaful operator to operate in this environment.
So what are the future prospects of Takaful in the UK, given the Prime Minister in 2013 declared the UK as the Western hub for Islamic finance?
Well, we think a lot. It's both internally inside the UK, so we are trying to encourage the use of Takaful products to ensure large commercial risk in the UK, but also in the London insurance market, which is the world's largest commercial insurance market, providing a Sharia compliant product.
What is the presence of Takaful in the UK?
Well, generally it's a product that obviously hasn't got much penetration at the moment. It's open to everyone in the UK. It's not just Muslim only. It has a number of benefits that we'd like to sell and explain to the rest of the population.
When compared to the more developed Islamic banking sector, the progression of Takaful remains less developed. However, Takaful continues to expand with positive growth momentums in Saudi Arabia, the United Arab Emirates and Malaysia, which is one of the world's leading and established Islamic economies that has developed and implemented successfully a number of Islamic financial products. There's significant growth of Takaful in Malaysia. Why is that?
Both Islamic banking and also Islamic insurance have been growing in tandem quite rapidly in Malaysia, resulting from the government support and the incentives that are offered by the government to the banks and also insurance companies.
So in Malaysia, what are the determinants of Takaful demand?
We offer profit sharing to our customers. So in the event there is no claim, we give you back a percentage of your premium. Whereas for conventional insurance, once you have paid the premium, regardless whether there is a claim, you get no money back. So the profit sharing element is something that attracts the public, be it Muslims or non-Muslims, because everybody likes to have a rebate. So this is, I think, one of the most powerful value proposition of Takaful in Malaysia, which has again created a lot of interest and growth in the country.
Do you think that the success of Islamic finance in Malaysia can be achieved by strong support of government? Is that a good example for other nations to follow suit?
Yes, of course, because we operate in both Malaysia and Indonesia. The big difference I see between the two countries is in Malaysia, government is very supportive of Islamic finance, very supportive, Whereas in Indonesia, it's not quite there yet, So we see that growth in Indonesia has been quite challenging. The conventional banking and insurance have dominated the industry. Takaful and Islamic banking is still very, very small. Whereas, they have probably 90% of their population who are Muslims. Whereas in Malaysia, we only have 60% who are Muslims. But due to the strong government support and the proper regulatory environment in place, Islamic finance has been probably growing a lot faster compared to any other countries in the world.
There's significant growth of Takaful in Saudi Arabia. Why is that?
The government has supported the insurance sector since 2014 by implementing the new regulations. These regulations actually are Sharia compliant regulations which allows the companies and the Sharia Takaful insurance companies to grow and promote their products within the Saudi market. That was actually an opportunity for the companies to grow rapidly in the past 10 years.
Has that been the main contributing factor to the growth?
Actually, a number of factors have been there, looking at the economy and the growth in the economy overall, and Takaful has been part of that global growth, and with the support of the regulator, we've been able actually to contribute positively in terms of the growth of the economy and providing our services and products to the consumer.
Do you think that Takaful can be successful beyond Muslim majority countries?
It's going to be difficult. It's going to be difficult, because I simply can't imagine Takaful being successful in a country where the regulation and the government doesn't have the proper infrastructure to allow Islamic finance to operate.
The biggest challenge for the Takaful industry is looking at their value proposition and offer the right products, services, which will allow them to capture a market from other segments, not specifically to be Muslims, but also could be non-Muslims.
Islamic finance is a growing niche within the wider financial market and has seen rapid growth in the past 2 decades with the success of some limited products. Sukuk, the Islamic bond equivalent, being the #1 globally accepted and successful financial instrument. How is Takaful performing by comparison?
Well, Takaful, just like conventional insurance, you've got to break it down in life and non-life sector of the business. The non-life sector, i.e. car insurance and so on, doesn't make money. So therefore, any of the Takaful players who do want to go into the market, they need to have a deep pocket, need to put in a lot of capital, which I think there has been a reluctance on part of a lot of these players who wanted to move into the Takaful market. But if you're talking about the life Takaful, that's a totally different ball game, and it's a long-term insurance which may have the capacity to flourish.
As it grows as an industry, what other kind of challenges can it expect?
In both Muslim and Muslim majority countries and non-Muslim countries where Muslims live in significant numbers in Europe, there is definitely a demand for it, but really the operators need to understand how to pitch the products and at what cost, because it's not good just to say that this is an Islamic product and a Muslim should buy it and they should pay over and above what the market is. So that aspect, that a Muslim should take a Sharia compliant product, whether it's Takaful or mortgages, and pay more, doesn't help the Takaful operators or will not help the market to grow.
At present, the numbers of qualified Sharia scholars are limited. As Islamic finance continues to expand globally, the requirement for professionals educated in both Sharia law and finance will need to increase too. However, currently there's a lack of sufficient specialist training and education.
As a university, we work very closely with the industry in determining our curriculum. We've now graduated close to 1,100 masters and PhD students from 67 countries around the world who have this level of expertise. And whilst that may be a drop in the ocean, it's 1,100 more people who are competent and capable compared with 10 years ago.
Education is one of the big challenges. It's not only education in the sense of having more capacity of Sharia scholars to approve certain products, but also education on the consumer side.
There's a discussion on whether the current Takaful models should be developed with an approach to create greater and more widespread success of this financial instrument.
As far as the products are concerned, there isn't much that needs to be done. If it's car insurance, straightforward car insurance, house insurance or life insurance products. It's just that In UK, we've had a very good model called mutual insurance companies, where the participants in the insurance product actually work for the benefit of each other. So people are looking at Takaful as a mutual benefit for the participants in the pool of money that they put in, so that anyone who has a problem can benefit from it.
Takaful companies maybe are capable of developing and being innovative in terms of providing that Takaful, which is a solution for consumers regardless of their beliefs or their religion.
So there's a consistent evolution taking place. The original model, which was a Ta'awuni model, did not work. Then we came with the Mudaraba model in Malaysia. That also, there was criticism. Then we developed the Wakala model. Then we went to the Waqf model in Pakistan. Now what we're talking about the hybrid model. So with the hybrid model, the sky is the limit.
The ripples from the recession of the late 2000s are still being felt worldwide. Against the backdrop of a slow and staggered global economic recovery, with the possibilities of continued vulnerabilities and uncertainties, how can Takaful develop and gain a competitive advantage?
The products of Takaful have to be relevant to the 21st century. So we're talking about cybercrime, we're talking about political violence, and these are products that London market dominates the world, and it's one that we want to encourage the use of Takaful.
Also, the price of oil will have an impact, because if there's very little liquidity in the market to do new things, then it may not find a home for Takaful products.
The halal industry represents about 15–20% of total sales in the world, but those sales are not financed and are not insured in a Sharia compliant way. So this is an area where there is a great environment for development.
As Islamic finance continues to expand, it will no doubt overcome hurdles such as strategy, policy and regulatory compliance, some of which have dented the short-term financial dynamics of Takaful operators in some markets. What's the future looking like for Takaful?
The future of Takaful, I believe, really depends on getting the message across. It's clear articulation of the value proposition, its engagement, and it's removing the barriers to perception.
There is plenty of opportunity for Takaful to catch up, but it is, I think, in a corporate insurance space that it will make the most growth.
Globally, the future of Takaful, I think, will probably be more prevalent in Islamic countries. That's my view.
The future, I believe there is a huge potential in providing solutions for corporate and retail segments in the coming years.
As of 2006, about 25% of the world population was Muslim. This is expected to climb to 26.4% by 2030. With an ever-growing audience, the demand for Sharia-compliant products will grow too. However, for this industry to succeed like conventional insurance, it will require progression on many fronts. The focus is on Takaful operators to highlight the ethical values and transparency of their products, whilst furthering development of design and ensuring good value in order to appeal to an audience beyond Muslims. Ultimately, business is about supply and demand.